There are hundreds of ETFs to choose from on Trading 212, but how do you know which of these funds is the best to invest in? It's common to look at the most popular section for inspiration. If others are investing in them, then they must be good, right? Well, truthfully, there is no best ETF, as every investor has different goals and are looking for different characteristics in each fund. But to make this thought process a little easier for you, we're going to share with you our top 5 ETFs and why. We'll explain the attributes of each of the funds, and we'll also explain how you can use them to work for you in your portfolio. We've gone for a wide range of options that cover all bases, so make sure to stick around to the end of the video to learn more about some hidden gems that we found. Hello everybody, my name is Lewis and welcome back to iQinvesting, where we talk about saving, investing and everything in between. Make sure to subscribe to the channel and follow us on Instagram at iQinvesting UK for more stock market and investing based content every week. To make it clear, at iQinvesting we are not financial advisors, we're just amateur investors who simply love saving and investing, so please do your own research before investing for yourself. With that out of the way, let's get straight into the content. Choosing an ETF to invest in is pretty comparable to purchasing a car. When you go to buy a car, there are hundreds of options available. Many cars have the same functionality, but they may look or sound a bit different. Some cars, however, have very specific purposes and are suited to some people more than others. All cars can be used to get from point A to point B, but they will all do it in different ways and provide different experiences. This is exactly how you can think about choosing an ETF that's right for you. First of all, you need to determine what your investing goals are and what you want to invest in. Using this information, you can pick the best ETF that will match your specific needs. To cover all bases, we've chosen a range of ETFs that have different characteristics, so you're more likely to see one that will suit your needs. Multiple factors have been considered, such as diversification, market sector allocation, and even factor exposure. Although we may discuss it in the video, the past performance of the funds has not been used as a deciding factor for choosing these ETFs. This is because past performance does not correlate with future returns. Also, the funds in this list are ranked in no particular order. That's because each fund will be better suited to some investors more than others. With that out of the way, let's get straight into the top 5. The first fund on our list is a very popular option, and for good reason. It is the Vanguard S&P 500 ETF GBP Accumulating, with the ticker symbol VUAG. This ETF tracks the S&P 500 index, which are the 500 largest companies in America that pass screening from a board of directors at Standard & Poor's. By buying this ETF, you are holding the majority of the US markets. Some people would argue that this S&P 500 ETF is globally diversified, as most of the companies in the ETF are considered international companies. There are a few S&P 500 ETFs to choose from, but we chose this one because it is accumulating. This means that the dividends are automatically reinvested, which will improve the returns of the fund. It's also worth mentioning that the ETF is using the Great British Pound, or GBP, as opposed to the US dollar, or USD. This will have an effect on your returns depending on the performance of the Great British Pound versus the US dollar. If the Great British Pound grows stronger than the US dollar whilst you hold your investments, then your returns will be lower. However, if the US dollar grows stronger than the Great British Pound, then your returns will increase. Just bear in mind that this is a very short-term effect, and in the long run, it all tends to balance out. The US markets have shown great performance over the past few decades, and they have grown to become dominant in terms of global market capitalization. So, if you believe that the US will keep up with this success, then VUAG could be a great option for you. The next fund in our top 5 is a more truly globally diversified option. It is the Vanguard FTSE All World ETF, US dollars accumulating, with the ticker symbol VWRP. The fund tracks the FTSE All World Index, which represents the performance of large and mid-cap stocks from all around the world. The ETF currently holds 3,468 stocks and also automatically reinvests its dividends. By holding this ETF, you're gaining access to a globally diversified portfolio with just one fund. Any investor can simply buy this fund, invest in it for the rest of their life, and attain solid investing results. With so many stocks held across so many countries, you have excellent diversification, which means less dispersion in the possible returns and more reliable results. So, by holding this ETF, you can confidently achieve the returns that the global markets produce over your investment horizon. If you're looking for an all-in-one ETF, then VWRP could be a great option for you. The next fund in our top 5 has a more concentrated set of holdings. It is the iShares Nasdaq 100 ETF US dollars accumulating, with the ticker symbol CNDX. The fund targets the 102 largest non-financial stocks that are listed on the Nasdaq Stock Exchange. It also automatically reinvests its dividends. The ETF also has a strong weighting towards the information and technology sector, which is why it gained a spot in our top 5. Many investors believe that the technology sector is bound to excel in the future, and this fund allows you to invest in that promising future. The top companies in the ETF include the tech giants Apple, Microsoft, Amazon, and Tesla. These companies have driven the excellent returns for this ETF, but will this outperformance continue in the future? Only time will tell. Just make sure to remember that past performance is not indicative of future returns. You should also be conscious of the fact that all of the stocks in this ETF are US based, so you will not get global diversification by holding this ETF on its own. That said, if you believe in the technology sector and these massive companies, then CNDX could be right for you. The next ETF in our top 5 is definitely a more unique option. It is the iShares Edge MSCI World Value Factor ETF, US dollars accumulating, with a ticker symbol IWVL. The fund invests in 401 value stocks from all around the world. It also automatically reinvests its dividends. A value stock is a stock that is undervalued relative to the company's fundamentals. If you missed our video on factor investing, make sure to check it out. In that video, we explained that value stocks, on average, earn higher returns than growth stocks. In fact, from 1927 to 2015, value outperformed growth by a massive 4.8% per year. If you want a piece of this outperformance, then the value stocks held within this ETF could earn you those returns. It is worth mentioning though that the value factor has underperformed in recent years, causing many investors to claim that the value factor is dead. However, this is not the first time in history that the value factor has experienced such a long period of underperformance. In fact, it is actually pretty common, and the lack of returns tend to end with a sharp burst of positive returns that earns investors the value premium. So, should we expect a positive future for the value factor and the IWVL ETF? Only time will tell. One thing that we do know is that if you believe that the value factor will pull through, then this ETF could be a great option for you. The final ETF in our top 5 also pursues the investing factors, for those looking for those return premiums. It is the SPDR MSCI USA Small Cap Value Weighted ETF, USSC. The fund invests in 1,541 stocks from the US, and it tracks the MSCI US Small Cap Value Index. This means that this ETF targets both the size and value factors, which actually provide even better expected returns when combined. Both of the factors have independent risk, which means that you can actually take on more risk in your portfolio without increasing the overall risk levels of your portfolio for higher expected returns. Although this fund has underperformed the market in recent years, over the long run, the expected returns are higher than the market average. The fact that the fund holds over 1,500 stocks that are focused on just the US small cap stocks means that you get excellent diversification in that market sector. It's worth considering that this is only a small subset of the US markets though, so it would be best combined with other traditional global ETFs for a proper globally diversified portfolio. This concentrated ETF is certainly unique, but if you really believe that the size and value factors are going to pull through over the long run, then this could be a great ETF choice for you. And that's it, our top 5 ETFs that are available on Trading 212. We hope you enjoyed the range of ETFs in this video, and hopefully you learned about some less popular ETFs that could be right for you. If there are any ETFs that we missed that you think should have made this top 5, we'd love to hear your suggestions in the comments below. The key takeaway from this video is that there is no best ETF in the world, as we all have different preferences and investing goals. It's all about making sure that you select the right ETF or combination of ETFs that suit your investing needs. And with that, make sure to subscribe to the channel and follow us on Instagram at iQinvesting UK for more stock market and investing based content every week. If you enjoyed the video, make sure to smash the like button and share it with a friend so that they can see this top 5 list for themselves. As always, thanks for watching.